The days of the old CPA behind a desk with a green visor are gone. I'm sure there's plenty of people that still have their visors. For us, it means something different. We're really passionate about building accounting systems, accounting processes in a new way to help entrepreneurs. Hey everybody, welcome back to another chat with Proseer. I am Jeff Rudner, the co-founder and COO. With me is Larry. Larry, how are you doing today?
Doing great. Excited to talk about one of our favorite topics.
That's right. This is a topic that is really important to us. It's the foundation of our business, but also the thesis of how we built our business. Larry, you want to talk a little bit about how you've thought about outsourced accounting, CPA services, strategic tax and finance, and accounting systems, and just give an overview of why you're so passionate about it.
You know, I think throughout my career, we've done a lot of tax work. And in tax work, you're looking at the past and sometimes have imperfect information. And so one of the best ways to make the best tax outcome is actually to go all the way back to the basics, which is bookkeeping, bank transactions, and how the business is running to make sure those transactions flow smoothly into the system. When you have timely and accurate financials, you can do a ton of really great planning and advisory. Some of that's tax planning, some of that's business planning, and it really all goes back to the beginning. With bad data, you're not gonna be able to get the best result. With good data, you can do great.
Yeah, that's a good point. It used to be back before everything was fully integrated and integratable that you'd have separate departments for tax, separate department for finance, separate department for accounting. But these days, we think about it a lot more holistically and interconnected. I think that's a good word to describe the new way of accounting and finance relationships. Everything's got to be connected and you have to look at it in a holistic way. So I'm excited to dive in today about our topic. Our topic is CPA services and the way that business owners can really benefit from leveraging their CPAs. The days of the old CPA behind a desk with a green visor are gone. I'm sure there's plenty of people that still have their visors, but for us, it means something different. And we're really passionate about building accounting systems, accounting processes in a new way to help entrepreneurs. So the first thing that we think of when we think about CPA services is outsourced accounting. It's a foundation of a lot of the things we do. So Larry, what is outsourced accounting and how do we typically think about it? Typically it's accounting and bookkeeping, but how do we think about it and what's the difference between those two things?
I think outsourcing your accounting's got a great return on investment. You really have two choices, right? Or three choices. You could not do your accounting at all. We don't think that's a great idea for lots of reasons. You could try to do the accounting in-house with a bookkeeper or do it yourself, or you can outsource it to professionals. We obviously believe that outsourcing to professionals works really well for many businesses, not for all, but for many businesses. The things that you get from that is you get the right levels of service and the right professionals at the right time. And so with that, obviously we're gonna do the bookkeeping in an outsourced accounting engagement, which is just getting all the bank transactions, credit card transactions accurately and timely accounted for. But when we go further than that, we can get past cash basis accounting, which is just the money in and the money out of your accounts, and get to accrual basis accounting, which is really the principle of matching income and expenses in the same periods, right? So lots of times when you have sales to customers in a cash basis environment, that revenue is recorded when you collect it, when the money lands in your bank account. But in an accrual environment, which is what most larger businesses will use, and many small businesses too, the revenue is recorded on your income statement when you send that invoice out to the customer. There are more complicated ways to do revenue recognition, but that's pretty much when it is. When that revenue is earned, that's when it's income. The same thing for expenses. In cash basis, it's gonna be when you've paid, when the money actually leaves your bank account or when it hits your credit card. But in an accrual basis, you can see and plan because now you have a payable. Maybe you owe somebody, you got a bill, and you owe them in 30 days. Or maybe you pay them late and you pay them in 60 or 90 days. That's an expense when you get the bill, when those services were rendered. And what that does is it gives a much better and accurate reflection of how your business is doing. When you have a great reflection of how your business is doing, you can now use your financials to help make informed decisions about what to do next.
Good point. How do you approach the balance between bookkeeping and accounting when making recommendations to clients?
Every situation is a bit different, but depending on what your business is, the type of business, how complicated it is, who the stakeholders are, like who's going to be using these financial statements. Is it just you as a business owner? Is it a bank? Is it investors? When you think about the users or the readers of the financials, then you start to figure out how much investment do we need to make our financials more accurate. Because sometimes cash basis is good enough, and that's all you need.
Yeah, for us, at least for me, I typically preach using the financial statements to run your business, understanding the data points that tell you how your business did, so that way you can make decisions for the future. That typically requires a higher level of input from an accounting team, but that's not always needed. Sometimes you just need your books done on a cash basis to get your tax return done, or you're not using the financials for anything because it's such a small project, and that's okay too. Just got to be aware that there are differences.
Absolutely.
All right, that brings us to our next topic, which is how we use the financials. This is something that is near and dear to my heart. It's finance as a service. This is an offering that a lot of CPA firms are beginning to offer. Finance as a service is essentially a fractional finance department supporting small and medium-sized businesses with the resources they need from a finance team at the ready. So it can encompass everything from budgeting, or some people call this an annual operating plan, which is done once a year to forecast and to plan how we think the next 12 months will do in order to give a team a budget and to help set guidelines and goalposts so that way we can track progress in the future, and then also to allow for quick decision making for spend. So for an annual operating plan, if you give the marketing team their budget for the year, they'll take that and they'll go work with their agency to build out their marketing strategy and their paid ad spend, and it's already pre-approved spend. And then what you can do is you can track against that on a monthly basis with budget versus actuals. The other thing that a finance team can do is they can do forecasting. So you have your annual operating plan or your budget, and in the middle of the year, you can do some analysis and update the budget middle of the year, which is called a forecast. So it's a change in the projection middle of the year. You still keep your budget for overall tracking purposes, but you have a more realistic approach with more data on how you're going to do and how you're going to end up the year. And then if you're fundraising or if you're working with a bank or a lender, a lot of times they'll ask you for a multi-year projection. And so you'll have to project out 2 years, 3 years, 5 years. So that way the end users can get an idea of where you think the business is going and to describe the business's strategy through numbers. And so a CPA firm can really help you with this process, building out your expectations. And it's a lot of the process of building out these expectations that make a big difference. Once you have those, then you can do the reflection on how you did comparing your expectations to actuals. And so we work with a lot of clients on that, just that. Once you build your projections, once you have your forecast, determining what's going right, what's going wrong, so that way you can make timely decisions and really support the strategic direction of the business.
I think another way to think about it is sometimes people write a business plan. It's in words, right? A budget or a forecast is often that business plan proven out in numbers.
Yep.
And then used as a benchmark to say, how well did we do? Are we executing on our plan?
Right.
And I think that many entrepreneurs have no business plan, or they have an idea, but they don't always think about unit economics, these types of things. And a forecast or a financial model can really help do that. Isn't that right?
Yeah, that's right. Absolutely. And so once you have that model, that then allows you to go deeper in with a financial professional to do those ratio analysis, look at your gross profit margin, look at your current ratios, look at different ratios that are specific to your industry to determine how you're performing, but you really need to set expectations at the very, very beginning. Additional things that your CPA professional can help you with are working on the due diligence process. So if you are raising money from outside investors, if you're working with a bank, this is a big lift, and it definitely can benefit you to bring in outside resources who do this often, who know what information the investors or banks are going to be looking for to prepare for that, and help you tell your story to lenders and investors in a way that makes sense, that's clear, that kind of speaks to their investment or funding language, because a lot of times entrepreneurs are so focused and so strategic that it's hard for them to explain to other financial professionals what they're looking to do. And so that's where a CPA, the right CPA, can come in, help you translate and make sure you get the deal done.
And what happens if you just come in with like no financial statements to the bank or investors, or financials that aren't quite right, or maybe they don't tell the story right? What happens when you go to fundraise?
I would say in a normal market, a lot of times it forces the process to take a step back, because starting off on a foundation of confidence is kind of table stakes. The bank or the investors want to make sure that they're working with a professional organization that has their stuff together, has a organized process, and has a system to get the information that they need in a timely manner. If the business doesn't have the information available, a lot of times it'll sow doubt in the investor or the bank to think, hey, if they don't have their financials ready, what else are they missing? That can kill a deal, really.
Yeah. So I think you're thinking about maybe a lower valuation.
Mm-hmm. Yep.
Right? Or maybe not getting the deal done at all. On the flip side, really early stage companies, the financials might not matter really at all.
Yep.
And maybe they're just investing in the founder or the idea.
Absolutely.
So, I think it's the advice is always still customized on how much do you need and when do you need it.
100%. I think it's scenario dependent, but I've never been in part of a scenario where having this all tightened up has hurt. It's never come up and said, why did you do that? You've wasted a lot of time doing this. It's always been, this is great. Thank you for doing this. This really helps us understand the business. Now, it might not get the deal done on its own, but it builds that framework for confidence in the relationship. So
excellent.
So that's finance as a service. That next way that we see that CPAs can support small businesses is through tax strategy. So Larry, this is really where you shine. Elaborate on tax strategy and how CPAs can help.
So tax strategy, tax planning, tax advisory, all these things mean the same thing for the most part. And what it is it's what happens before the compliance occurs. So everybody knows about tax compliance, getting your tax return done. But what not everyone has experienced is what is tax advisory. And what it is working with an advisor who understands you and your business, your family, and also tax laws. And what we're working toward, ideally, is optimizing your tax position, helping you make decisions before the year is over about things that you can do or things that you shouldn't do to help optimize or make it so you pay the least amount of tax payable under the law. It's also about helping avoid unnecessary risks. There's tons of advice out there. Some of it's good, some of it's bad, but working with the right advisor can make it so that you can get the best possible outcome.
Yeah. Absolutely. It's very interesting from a tax perspective how there's really no one size fits all. Every time we've had a conversation, Larry, about, hey, what happens in this scenario? What happens in that scenario? The answer is always, it depends, because tax planning, tax strategy really depends on the specifics of the individual and the business and the family. And so it's really important that entrepreneurs and founders work with the right team that knows their specifics and their details. Is that right?
That's right. I mean, recently we had a call from a client asking, should they do a cost segregation study on a real estate deal that they were getting into? This real estate was held in a partnership with different owners. And many people will hear the cost segregation study and say, we should definitely do that. That gets us extra depreciation. And that's true. But you have to go a level deeper and you have to look at who are the partners in this partnership. Or if you own it directly, what is my own individual tax situation? And say, if we get additional depreciation deductions, what will that do to the ultimate taxpayer? Will that allow additional deductions? Will it offset other types of income? And the answer is, it depends. It depends on what your status is. Are you a real estate professional? Is this a passive activity? Do you have basis in your interests? All these types of things matter. Plus, you want to think about what's my holding period for the property. If you're going to sell it pretty quickly, at least that's your plan, then a cost seg probably is not a good idea. Anyway, if you're interested in more, there's an article that we posted recently that talks about things to think about with regard to real estate and cost segs.
Yeah, that's a great specific example. With social media, we hear a lot of different tax advice that's spewed out there. Some of it sounds very, very attractive on its surface, and often it can work, but in the right scenario, it can work with the right people, with the right specifics. And it's super catchy on a headline, but may not apply to 99% of the people that hear it, but it's attractive to sell. And so it's really important to help you. It's really important to have the right team behind you to help you understand what's real, what's not, and how you can optimize your position in a legal and supportable way.
That's right. And so then once that tax advisory is completed, or it's really kind of an ongoing process. But once you get to the point where you need to then prepare your tax extension in the spring or file your return in the spring or later, this is tax compliance. And it's always backward looking at last. And so this is where all that advisory work then gets pen to paper, if you will, right? And we make sure that the strategies that we outline and that we plan to do are then executed correctly on the filings, and they're as expected. You can never plan for everything that happens, but you can do your best to avoid uncertainty or reduce uncertainty and help folks understand what their obligations are going to be. You know, what most clients really appreciate is knowing how much they're going to need to pay and when. Nobody likes that surprise that says, hey, you need to pay a lot of money next week or tomorrow. That's unexpected. These unexpected negative surprises are what we really work to avoid with advisory plus compliance.
Awesome. Now, the last one is, I would say, a pretty new topic when it comes to CPA services and CPA firms. It's been a trend that's been growing and growing recently, but not something we've seen historically as an offering from CPA firms. And that's really building and supporting the financial technology stack. So, Larry, let's talk about what is the financial technology stack and how do CPAs fit into this tech role that was previously reserved for just back office IT people.
What's happened in the accounting industry is the same that's happened in software for many types of verticals and industries. The move to the cloud over the past decade plus has democratized access to really sophisticated software. And what that's done is it's turned lots of people into system admins, if you will. And what's happened there is now everybody has access to software that was traditionally only for Fortune 500 companies, large enterprises. But with that software comes lots of configuration choices and things like this, which we're experts in helping set up and configure. Now, why is all this important? Why does it matter? It's important because if we deploy the right technology stack, what do I mean by this? I mean general ledger software. It could be QuickBooks Online, Sage Intacct. If we deploy the right software and configure it correctly, you can have real-time financials, you can have paperless processes, whether it's for bill pay, invoicing, employee expense reports, and you can have digital approval flows, all sorts of things that can really move your business to the next level if you're not already there. And so by pulling all this financial technology together, you can really put the infrastructure in place for your business to be able to scale, or if you're not scaling, just to run more efficiently.
It's a great overview. The way that we think about it here is digital transformation through holistic financial systems. And so for us, utilizing the enterprise resource plan, the ERP system as the hub of all things financial, you're able to transform a business's processes and their flows to reduce manual workflows by 60, 70%, and also the time that it takes to close your books from a matter of weeks to a number of days. So that way the leaders of the business can get the information they need in a timely manner to make those quick decisions. So digital transformation has come for the financial department, and it's impressive to see how quickly it's changed. And the CPAs are acting as the hub of this, integrating everything because of the way that we interact with the rest of the systems in the departments like we talked about previously. So
Absolutely.
Larry, let's talk about just a scenario of how you've seen this work from a client in general. How have we taken a client through digital transformation from a lot of manual processes to saving countless hours, saving their weekends? Do you have an example of that?
Yeah, sure. I mean, we have many examples,
Yep.
but let's go ahead and talk about one. In a relatively simple example, client was already on QuickBooks Online, which is a good spot to be at, okay? But they didn't have any approvals, any approval system. So hey, is it okay to pay this bill via an email? And then when the bill was ready to be paid, they go to the bank website, send a bill pay, or write a check and send it in the mail. All that takes time. And if that approval system or flow is more than one person, or that person doesn't respond, or if the volume is tremendous, then getting those bills paid with control is very difficult, okay? So what you do is then you add on an accounts payable approval and a payment execution system that syncs automatically with QuickBooks. When you do that, what happens is you get accrual for your accounts payable. So now you're matching your expense to the right time, and you get the ability to see when payments should be paid, when they're approved, and then you can even make payments electronically to your vendors via ACH or wires, right? Paper checks are still available through these systems as well, but everybody's happier when checks aren't in the mail. I can't remember the last person who said, hey, you know what? I'd really love it if you sent me a check in 7 days.
Right.
Nobody says that ever.
Right.
So that's a simple example of transformation, but there's quite a bit more when you get into multi-entity and larger departments.
Yeah, that's a great example. I think to sum it up there, it's centralization of the information, providing visibility to those important stakeholders, and provide that approval process for everything. So in one place. In the old days, you'd have an invoice that would be received in the mail. Someone would have to open the mail. Then they'd have to bring it to the AP clerk, who would enter it into the accounting system and then put a form on top of it that was an approval form. They bring it to whoever was the first one in the queue to approve the invoice, saying that they reviewed it and signed off. They would physically have to sign off of it on it, and then it would have to go to the department head. The department head would look at it, look at who signed off before, make sure that there was either a purchase order or it was in the budget, and they would actually sign off on it, then bring it back to the AP clerk, who would bring it to the Treasury Department to actually pay. So you took something that would take weeks and a lot of manual hours to do to something that's a matter of clicks and can be done on a continuous basis. So we are really passionate about that, and we've seen how much time it could save for our clients. Our clients we have many of them that were doing their books on the weekends to keep things up, to understand how they were doing. And it's been amazing to watch how much weight is lifted off their shoulders to get the time back that they can be strategic about their business and just spend time with their families. So that's all things that are done through digital transformation and financial technology. So I know you're passionate about it, Larry. Anything that you want to kind of summarize there?
I think last thing would be, it also adds a bunch of internal control if configured correctly. So unfortunately, theft can be a real problem in small businesses because there's not enough different people in the loop. If one person is processing accounts payable, printing checks, and potentially signing checks, and they're not the owner, they have an opportunity to steal. And when you add in systems like this, they don't solve the problem, but they do make it easier, because maybe you can help segregate the duties some. Also, bring in an outsourced accounting team and fill one of those seats to further segregate duties. And so while it does save time, it can add control, which is, I think, something that may be even more important if the worst happens. Right.
Awesome. Any final thoughts on our topic today? How CPA services can support entrepreneurs achieving their goals?
I think holistic planning, along with the right technology to give you real-time information and the right team to operate that technology for you to make sure your accounting records are accurate, can really go a long way to improving the chances of success or allowing your company to scale faster. These things are really a tremendous offering and opportunity. And so, leverage your advisors. Don't just talk to your CPA once a year at tax time. These folks are available for you. They can really help make a big difference for you and your life and your business.
Awesome. And I'll second that. The modern firms of today are not your mother and father's CPA firms. They're forward-thinking. They're proactive advisors that want to support your goals and want to support you as an entrepreneur and business owner in achieving your goals. And we use technology to do that, to make our lives easier, but also to upskill and to improve and increase the way that we interact with our clients. And so we pride ourselves on being that modern firm. And we're excited for all the things that we can do with our clients now, and for all the things that we're going to be able to do as these systems and processes improve, and as this new age of CPA services is embraced by the economy and the greater entrepreneur community. So yeah, thanks, Larry, for that. I appreciate it. And obviously we're passionate about it. So just to recap, we say there's 4 ways that CPA services can support business owners in achieving their goals. And the first one is outsourced accounting services. The second one is finance as a service. The third is strategic tax and advisory. And the fourth, which is a new one, is building and maintaining the financial technology stack. So if you're interested in any of these, reach out to us. We're happy to give you an overview of how we do things and why we think we're a little bit different. And stay tuned for more. Thanks a lot, everybody.